Oh, hey there, everyone. Welcome to Chart This with Dave Keller. Happy Monday, June 9th. I'm your host, Dave Keller, coming to you from a beautifully sunny Redmond, Washington. Hope you all had an enjoyable weekend. I appreciate the comments in the YouTube chat, which is getting a little more unhinged every week. I feel like names being thrown around for our newfound roosters. Keller's Cluckers, that's a winner. I think that's top choice so far. We have named the two roosters. We actually went and got chicken feed. Kids are having fun with them. The dog seems to be getting along with them. They're part of the family now. I mean, that's how this happens. So overall, no further bobcat sightings, no cougars. Roosters are coming and going, but can tend to keep coming back to the property. So Keller's Cluckers. Oh, my kids are going to love that. I'm writing that one down. Thanks for that. I appreciate that. Chuck, well done. Well done. Talking about the markets here, choppy day, to be honest with you, right? What you'll see is something like the Dow opened weaker, traded higher in the afternoon, settled back down to literally almost exactly where we started. You're going to find that the Dow Jones Industrial Average finished just about 1 point away from where it closed on Friday. Now, that's 1 point on an index valued in the 42,000-ish range. So that is like 0.00002% or something, so sort of a move. And this is basically an kind of day, an unchanged day, but plenty of movement underneath the hood, right? And what we're going to find when we look at the sectors, when we look at the heat map, there were some stocks and groups and themes starting to work. The Magnificent Seven, the growth leadership, just continues to push to the upside. That's driving a lot of upside in the benchmarks. Charts like Amazon, pushing above the 200-day moving average and holding them. Tesla having a bit of a bullish rotation today with a nice bounce as well. So overall, plenty to talk about. Let's get to the market recap and see how things are playing out here. So we look at the market recap. The S&P 500 slightly higher. I mean, 0.1%. We're just above 6,000. That's basically where we closed the day on Friday. Friday we closed almost exactly on the 6,000 level. Today we pull back to around 6,005. So we'll call it basically an unchanged day. You're going to see the Dow is basically about the same, finishing at the zero level. The NASDAQ about 1/3% higher. Mid caps, small caps all in the green, with the S&P 600 small cap index up the most, just less than 1%. So not a great up day by any stretch, but small cap over large cap, it's been pretty uncommon that we've seen that particular move. The VIX actually moving slightly higher today, but not by much, right? We're just above 17. So we're still in a low volatility environment with the VIX remaining below that crucial 20 level. We'll look at the chart of the S&P 500 here in a little while and dig a little deeper into the takeaways as we sort of debriefed on last week with our premium members and now digesting today's sort of choppy sideways day. Rates generally moving lower today. The 10-year yield slightly lower, just below 4.5%. The long bond yield's around 4.95, and the 5-year point is just above 4%. So bond prices moved slightly higher, but again, generally this was not a big movement day for major asset classes. Dollar was about 0.25% lower. That's using the dollar ETF that we track, ticker UUP. Looking at the commodity space, now this is where we are starting to get some moves. So we're going to see gold up 0.5%. And that was actually one of the more underwhelming moves in the commodity space. Copper ETF, CPER, was up 1.5%. Silver prices up over 2%. Platinum, palladium up even more. I actually was asked about that in an interview last week. I grabbed that chart to share with you today. But you're going to find that some big acceleration. Also, nuclear stocks. I don't think I grabbed one of those, but nuclear names. I think it was CCJ was the one I was looking at earlier. With a nice move to the upside. I'll grab that one a little later, time permitting. Cryptocurrencies, kind of a quiet weekend, to be honest with you. And over the weekend, Bitcoin sort of retested, got toward that 100,000 level, but accelerating to the upside through the course of the day today. As the equity markets open, Bitcoin accelerated higher, currently trading just below 109,000. We are rapidly reapproaching previous all-time highs, just above 110,000. So, generally Bitcoin bouncing well off the 50-day moving average, rolling higher, rotating back to test the previous highs. All 10 of the top coins tracked on the stock charts platform are in the green today. I do own Bitcoin and Ethereum. Those charts overall still look quite constructive, I would say. And again, pushing back towards all-time highs. Certainly not a bad thing by my read. All right, let's look at the 11 S&P sectors. We can see 4 up, 7 down. Top performing sector today, consumer discretionary. Now, Tesla having a nice bounce after Thursday and Friday, pulling back really through the course of last week. But today bouncing back higher here. The XLY was up 0.8%. Materials number 2, and that's where nuclear names and some others are going to be located. It depends actually on what particular. That's not necessarily true. It depends on what area of the energy space we're talking about. But I think some of them are bucketed there. But the materials sector up 0.7%, technology up 0.5%. Energy was just slightly higher as crude oil prices continuing to bounce off of their double bottoming pattern. On the downside, you have utilities down 0.6%, financials down 0.6%, communication services down about 1/3%. Kind of an underwhelming set of charts in the financial sector. We're going to look briefly at one of the insurance companies. I feel like I grabbed Prudential or one of those kind of names, sort of rotating lower. Progressive is what I meant to say. I forget which one I grabbed though, so I'm going to save that for the chart review that I look at in a little while here. Looking at the breadth conditions, we can see generally positive. The New York Composite Index, which is that top line, 62% gainers, 36% decliners today. So almost a 2-to-1 ratio. Up to down, a little less constructive, but still okay on the S&P 500, right? The S&P 52% advancers to 48% decliners. But look at the breadth in the small cap space, and this is what's been this has been very uncommon, that the breadth in small cap looking so much better than the breadth in large cap. The script has been flipped on that one pretty much for the entirety of 2025, with some random exceptions. But the small cap advancers, 79%, decliners, 21%. So breadth strongest in the smallest area of the market. I think it's a little early or a little premature to be declaring a raging bull market of outperformance for small caps, but worth noting that was the trend that we saw today. All right, looking at the Magnificent Seven and friends, Tesla, as I mentioned, having a nice update. This is after getting dinged pretty good through the course of last week as the Musk Trump conflict, I guess, is what we would call it. Very public disagreement over social media, accelerated, and we saw Tesla get dinged pretty quickly last week. At one point, down over 20%. I think that was from Wednesday to Thursday. But today, bouncing for now off of those lows, up 4.5%. Amazon up 1.6%. Arguably, maybe one of the more crucial charts within this bucket. I would say Amazon and then Alphabet as well, both up over 1.5% today. These are stocks that are sort of actively testing their 200-day moving average. And I think the question, in my mind, one of the questions going into this week, those names, Amazon and Alphabet, just pushing up their 200-day, do they hold it this week, right? Amazon for now has held its 200-day moving average on a pullback. Alphabet just pushing above it going into this week. For now, the market is telling you, yeah, they're hanging in there just fine. Stocks in this bucket down so far today. Broadcom down over 1%. Now that's an interesting one because Broadcom, following a really steep trend line, and then over the last week, broken down through trend line support, for now continuing to show weakness that we observed last week. Apple down 1.2%. This is the Developers Day, the WWDC, the Worldwide Developers Conference happening today. I did not watch it. I used to watch the whole thing. I found now I either watch a blog on one of my screens, a real-time blog, or I just wait until it's done and then I go check it out and see if there's anything interesting. Seems like kind of an underwhelming one, to be honest with you, in terms of the instant reviews that I was reading. Not a lot to get excited about. Some new technologies, some new things, new OS, Mac OS, some different things, but not a revolutionary WWDC, I guess. And for now, Apple down 1.2%. Netflix down 1.4%. That's probably the chart I'm least concerned about in this bucket because we're making new all-time highs last week, but certainly something to watch. All right, shall we continue and go to the heat map? As a reminder, I can see questions coming through on YouTube, LinkedIn, Facebook, and X. Those are the 4 platforms upon which we are streaming. I can see your questions real time as we go. So anywhere you can drop a comment while you're watching the live stream, please go ahead and do so. and we'll take a question or two at the end of the episode. We had a really fun all mailbag episode on Friday, and if you missed that one, please go back and review it. Some really thoughtful questions from your fellow viewers last week. Some good ones to dig into in a little more detail. All right, let's look at the market carpet. Kind of a mixed day, to be honest with you, as I'm looking at the market carpet this afternoon. Things that stand out, generally, I would say some of these names doing pretty well. I mentioned on the dashboard, Tesla obviously up over 4.5% is pretty good after last week. It certainly looked like it wasn't looking like it was finding a floor anytime soon. Good to see that happening, and for now, a bit of a bounce. We'll see if that bounce continues as the week progresses. Amazon and Alphabet right down the middle, also in the green, all encouraging. In the upper left, you can see some of the big technology names not up as much, but I would highlight the fact that semiconductors had a pretty decent day today. Here's AMD up over 5%, almost 5%, that is, pushing above 120 today, and that sort of continues that pattern of higher highs and higher lows off of the early April low. You can see Lam Research, LRCX, breaking to a new swing high. We can see a number of other names in this group, KLAC, maybe one of the better charts that I could highlight for you. And again, what's happened with a lot of the growth names, they look kind of like KLAC here. Rally off of the April low, in this case, gapped above the 200-day moving average. Then we stall out here. And I would say at this point, the bullish trend led by growth, very much a question mark, because you have stocks like KLAC gapping higher and then stalling out. And for about a 3-week period from mid-May to early June, we're sort of range bound in this little period, really essentially stalling out at the January and February highs, not able to really push above there in any meaningful way. But while we stopped going up, we also weren't going down at all. And I think the chart of KLAC really shows that gap serving as support, right? So when you have a gap higher like this, I usually highlight that with a shaded area on my charts, just to remember the fact that that gap range usually serves as an important area to focus on. That gap held a couple times here in late May, but now we've seen a push above 800, clearing this consolidation, clearing the resistance range, and basically heading us towards previous all-time highs. All-time high for KLAC was back in July of 2024, just around 880, about 50 points above current levels. So still more to prove here, but I would say the fact that we consolidated and then resolved that pattern to the upside is not bearish. That's actually pretty bullish development. On the downside, I would note in the financial sector, you can see all the insurance names. I think Progressive is the one that I grabbed. PGR. I said Prudential. I meant Progressive, I think. MMC, Marsh & McLellan, AN, AJG. These are a bunch of insurance names that had looked incredibly good. And you have to remember, AJC made a new all-time high about a week ago, less than a week ago, right? Pushed above 350, basically just top ticking the April peak, right? So this was a stock making new highs in early April. Now it sold off while everything else did, but this was as it was making new highs. On the market, the S&P and the NASDAQ made highs in February and then had been in a downtrend in March. And then April, with the tariff announcement, kind of accelerated it into the early April low. AJG and other insurance companies had actually been in an uptrend going into that initial announcement. From there, recovered very, very well. And last week certainly looked like we could be mounting a move to further all-time highs. However, this now looks like a test of resistance that failed. We didn't break above there. 350 held, and now we're rotating back to test an ascending 200-day moving average. Now, the stock has not been below its 200-day moving average in a number of years. As a matter of fact, we've had a number of pullbacks going back to 2023, and the 200-day moving average has been a pretty good place to sort of re-up a long position and push it to new highs. We don't have earnings again until the end of July, so there's no real kind of catalyst like that in the way. I'm wondering if this is another pullback to an ascending 200-day moving average. AJG may be one of those charts to keep an eye on this week to see if that test of the 200-day moving average actually holds. Elsewhere, where else do we want to go? Boeing making a new all-time high today. The industrial sector, that is. Overall, certainly one of the better sectors in 2025. In fact, one of the top performing sectors in 2025. At one point, that was driven primarily by aerospace defense names like Raytheon, which made a new all-time high today. Boeing, a bit of a lagger, but accelerating to the upside in May and June. And so those stocks in that space, names like BA, names like Raytheon, even others, stocks like Textron, starting to look like they're breaking above previous resistance. A lot of these are fairly extended. Textron is one that comes to mind, just pulling back to a support around 72, retesting resistance kind of 76 to 77. The 200-day moving average, we clear that. I mean, I think that's just an incredible recovery after that early April low. So aerospace defense continuing to be a pretty strong group in one of the strongest sectors so far in 2025, and certainly one of the strongest performers coming out of those early April market lows. Last thing I would say would be mixed results in communication services. I mean, and to be honest with you, like technology, I mean, if you look at the sector, there are some stocks up a lot, and it's things like Palantir. It's a lot of semiconductor names, as I covered, Empower, Microchip, SMCI, all up pretty good. But then there are a bunch of things that are down pretty well as well, right? It's sort of a mixed sector. And I would say with communication services, kind of the same thing. You've got things like Alphabet that had a pretty decent day. You have a bunch of other ones that are underwhelming. Warner Brothers Discovery on the news that they're sort of spinning out different parts of their business. And T-Mobile, one of the mobile companies, moving lower as well. All right, let's get to the charts. And I appreciate some of the great questions coming in. We've got a couple looks like we can take here at the end, and we'll call it an evening here on Chart This. All right, daily chart of the S&P 500. So, as we talked about at the end of last week, this pullback to the 200-day moving average, this pullback to gap support appears to have held. And I think what we saw last week was sort of upside follow through, pushing above that mid-May peak. And I would say today we're continuing that upward trajectory. I think if you haven't by now sort of appreciated the fact that this market appears innocent until proven guilty, I think that's where it is. And that doesn't mean I think the S&P is going to go up forever. I find that hard to believe. What I will tell you is that any sort of trend following mechanism you use right about now is probably bullish because of the acceleration we've seen off of the April low. And one by one, things that are reasons that I've come up with that, we should not believe an uptrend have all been checked off, right? We've all crossed those off because of the constructive price behavior. I mean, so what we're left with now is a market that's innocent until proven guilty. And so I think you focus on not trying to prove to yourself that the market's in an uptrend. I think that's done. It's what would you need to see to confirm that uptrend is no longer in place, right? What would tell you that we're starting to rotate lower? And the three things I tend to look at here would be number one, and among others, but number one, divergences. And that's the immediate thing to come to mind. As a market goes higher, as we keep making higher highs and higher lows, usually at the end of a move, you will often have a divergence where the market goes higher on weaker momentum. We may be seeing that, last week into this week. Still too early to say because the S&P is in an active uptrend. So if we continue in an uptrend and go up to like 61, 6,200, the RSI is probably going to keep going as well. And eventually it won't be a divergence. But if we would sell off over the remainder of this week, and that would be a clear higher high on weaker momentum, then I think we could have a divergence confirmed and something to look at. For now, it's something to look for. So not just on the chart of the S&P or the NASDAQ, but on key stocks, right? A lot of these names that are emerging from basing patterns, emerging from consolidation phases, are those new highs that we're experiencing supported by stronger momentum? And if so, conditions are probably still fine. If not, that's when we want to start to question. So number one thing I'd be looking for, divergences. Number two, breadth conditions deteriorating. We saw pieces of that sort of in this period, but we've seen a lot of those breadth indicators go back to pretty constructive readings, particularly the bullish percent indexes come to mind that became overbought. One of them, the S&P's bullish percent index, came back below 70%, but now both of them back above as the uptrend has been reinitiated. So I think watching for declines in breadth from bullish percent indexes from the McClellan oscillator, things telling you that even though the market's going higher, the breadth is not supporting it. That would be warning sign number two. Third thing would be leadership rotation, right? Looking at defensive sectors, looking at other things, looking at new things starting to emerge in strength. positions of strength, and the stuff that has done very well, which is basically technology, industrials, starting to struggle. And so again, none of those things I'm observing today when I'm looking at the evidence. I'm not seeing divergences, at least that I can confirm yet. I'm not seeing breadth really deteriorate to the point that I think it's a negative sign. And then the third one is I'm not really seeing leadership rotation that would have me worried just yet. Those are all things I'm actively looking for. Keep watching the show. We'll certainly keep you updated the moment we see some of those three warning signs start to pop up. Newer Dow theory I wanted to highlight, as I mentioned, divergences. There are a lot of different ways we can look at divergences. We can find momentum divergences where the price goes higher on weaker momentum. We can have breadth divergences where the market goes higher on weaker advanced decline data, for example. We can also have divergences looking at different indexes and comparing them. That's what Dow theory, which is named for Charles Dow, who kind of created this methodology of looking at the Dow Industrials and the Dow Railroads and seeing if they confirmed one another as a way of validating the uptrend phase. I use what's called a newer Dow theory, looking at the equal-weighted S&P and the equal-weighted NASDAQ, and that's what we're looking at here. If you look over the last week, the equal-weighted NASDAQ 100 in the bottom panel has made a new swing high, getting above the peak from mid-May. The equal-weighted S&P has not quite done that. Again, still too early to say that that's a huge divergence because we're still in an active uptrend. However, if we would start to sell off from here and we would have a situation where one of these indexes broke to a new swing high and the other did not, that would be called a bearish non-confirmation. That would not be bullish. That would actually tell you maybe we're at an exhaustion point. We'll still monitor this through the course of this week and see if that continues. All right, now we've validated or at least confirmed by my read that stocks are still in an uptrend, generally speaking. Let's talk briefly about some other asset classes, particularly the commodity space, particularly metals. The GLD, I would argue, still a good chart. It'll be a great chart again if it starts making new highs. We made a new all-time high in mid-April. We've now had a couple attempts to get above there, but have not been able to do so. We have held an ascending 50-day moving average a number of times on the way up. And so I would say GLD looks really good for now. It would look exceptionally good if we can break above that 315, 320 range. And that's the peaks that we saw in April and May. Now, having said that, the momentum's still pretty good, right? The RSI is holding 40 on pullback. So overall, this remains a strong uptrend phase. We break the 50-day. That would be one of those kind of warning signs. RSI breaking below 40. Those could be things that would tell me, all right, maybe we're really topping out and rotating lower. For now, I would say this trend is still positive. And I do own the GLD and the IAU in my own accounts. Now, while GLD looks good, I would say silver looks great because silver has actually gapped above previous all-time highs. This is using the Silver Trust, the iShares ETF, SLV. You can see silver actually had resistance from October of last year, right around 31.50 to 32. We retested that in late March. And now we've gapped above that level in the last week. We've continued to make new highs, making a new all-time high again on today's session. The momentum is strong. The RSI is overbought. That just means we've gone up a ton. Could have a tactical pullback, but overall, this is a chart making higher highs and higher lows above two upward sloping moving averages. Great chart. Then we get to exceptionally good chart. Platinum and palladium. This is the Sprott Trust SPPP as an example of the platinum palladium trade. I don't own this ETF, but it's one that I've followed here. And if you look what's happened in the last couple of weeks, gold and silver had been more in primary uptrends and then just continuing that uptrend phase. Platinum palladium, this ETF, sort of consolidating. And then about 2 weeks ago, we gapped up to $10 a share, clearing the resistance from February, March, early April. We pulled back and then continued higher. We've accelerated to the upside with this ETF. So, again, if you're thinking of the commodity space as just gold, or certainly the metal space as just gold, great reminder to look outside of your little gold bubble, which is something I'm definitely guilty of. I've sort of traded the GLD off and on for years. That's kind of my go-to, and I need to have some gold in the portfolio. It's just a natural diversification. I like the general vibe of allocating to at least some percentage of the portfolio to gold at any point. And then I up and, add or subtract to that based on market conditions. So I've owned some GLD for probably, I don't know, more years than I want to remember. However, it's a great reminder to not just limit yourself there. And one of the great benefits of using charts is you may not be as familiar with the platinum or palladium story or theme or why it's accelerating. But if you just scan for ETFs making new 3-month highs, you're going to see this. And then you're going to dig into a little bit further and see, why is that move actually happening? Is that move sustainable? And maybe should I take some of that commodity allocation and put it in other areas? Now, what's happened from a technical perspective is we've accelerated so quickly that now we've kind of had an exponential rise. We're testing the previous major highs from October of 2024. We are extremely overbought with an RSI above 80. What that usually implies is you probably have a pullback here at some point, but given the strength, the momentum that's accelerated to this point, when the RSI gets above 80, that usually means there's probably at least one more leg higher, is how we generally think of it. Back in the day, my analysts and I would call that the good overbought. When you had an RSI that was so overbought, it wasn't bearish anymore, right? It wasn't telling you we're probably going to pull back. It was telling you probably the strength of the momentum is so strong, you may get a pullback. But that's usually the kind of thing you expect to be a higher low before the next leg higher. So we'll see what happens with this particular ETF. But worth noting, out of those three metals, precious metals, that's the one that's accelerating the most. All right, let's talk about cryptocurrencies. Bitcoin sort of upping its uptrend, pulling back to the 50-day moving average over the last week. We hit 100,000, big round number. I don't think that's a coincidence. That's a level that I think a lot of people very rightfully focus on. More often than not, you will find things test support at major round numbers, and Bitcoin has been pretty consistent in that move. However, what we're now seeing is a rotation back to the upside. And now we're seeing a potential retest of the previous all-time highs around 112,000. That was achieved last month in May of 2025. Now, that move there was basically retesting the previous highs, which were December 24 to January 2025. So we broke out briefly. We pulled back to an ascending 50-day moving average. Now we're rotating back to the upside. The RSI held 40 on the pullback. That's a strong uptrend phase continuing higher. The kicker is, if we would get above 112, 113,000, we've never been there before, right? There's no resistance on the chart. If you look to the left, I think you go into full trend following mode and follow that uptrend as long as possible. All right, let's look at some individual stocks and equity ETFs, and then we'll take a couple questions. We'll be done for the evening. Semiconductors continuing to impress. The SMH, which is a semiconductor ETF, range bound between 235 and 250. That's after the gap right up above the 200-day moving average. We got to 250. We sort of traded around this range for about 3 to 4 weeks. And then last week broke above 250. And for now, continuing to push to the upside. Higher highs, higher lows, all bullish. In this case, as I mentioned, we look for a divergence at this point, not one to confirm just yet. Semiconductors in a pretty decent uptrend. Now, while I think there are plenty of names like I think KLAC was the one we grabbed earlier off of the market carpet. When you think about major growth companies, Amazon may be the most important one that I'm thinking of, because I think this one tells the story beautifully of a gap above the 200-day, pulling back to test support, but holding it, right? And as we talk about it, this is a great example as we talk about the 200-day moving average, why it's so important to follow that, what I call long-term trend barometer. There are so many investors, even that are not technically oriented, that tend to have a good idea of where the 200-day moving average is, because more often than not, you will find things tend to pivot around that level. And you can see a number of times here over a 2-3 week period where we tested the 200-day. We resolved that to the upside today, clearing 215, clearing the early May high. I think that's a nice breakout, basically suggesting a retest of the February peak around 240. Tesla having a decent update. This isn't really a candle pattern to speak of. It looks like a lot of other patterns, but it really isn't. To be honest, this particular 3-bar pattern. However, I would say the fact that we made a nice upside reversal above the 200-day is encouraging. I would love to see that stock hold the 200-day for sure, to validate a retest of these previous peaks. Also note the Fibonacci resistance. So when we gapped lower here and then entered into this sort of 3-week candle move, 320 is the upper end of that of the last couple sessions. That's also a 38.2% retracement of the December 24 to March 25 low. So I would say breaking above 320, that clears the way to 360, if not further. first things first, we've got to get above there. So nice move today. Nice to see an upside bounce after the significant drop we had last Wednesday, and Thursday was that big drop to the downside with all of the social media explosion between Musk and Trump. There's more over the weekend, but the stock today pushing about 4.5% higher. Love to see it regain the 200-day, regain that Fibonacci resistance to confirm more of an uptrend phase. Insurance companies getting dinged today. Progressive down almost 3% today, and I think the problem with Progressive charts is now we've established a very clear what we call resistance area, kind of that 285 to 290 range. We hit that first in March of this year, retested it in April, a number of times in May, and now again in early June. The market is telling you this thing's not going above 290, right? And it's told us that a number of times. By every time we get up there, there's an exhaustion of buyers, there's an influx of sellers, whatever it is. It's pushing price down to the downside. It's not just Progressive, it's a bunch of other insurance companies today that are all feeling the weakness here. So, with this kind of chart, it's one of those where I think this is a really compelling chart above 290, but only above. And until then, I think it's one that you probably wait and see. We'll see if we can hold the 200-day on a pullback here. The RSI is right at our sort of a threshold of remaining in a positive territory, but the relative strength super underwhelming. I almost finished this show with that as the last chart, and I felt that wouldn't be a great sort of optimistic way of finishing things off. So I found a good materials name to highlight. FMC Corp coming up on the list today of stocks making new 3-month highs. Now, this is a higher yielding name in the materials sector, yielding over 5%. But I like the fact that we're breaking above resistance from March and April, and of course May. We didn't even get up to 42, 43, but today we are powering above there. 200-day moving average looming pretty large. Last couple attempts to get above there have failed. So I'd love to see a move above $50. That would really unlock a retest of those late 2024 highs. But for now, let's celebrate a break out of the basing pattern, a push above established resistance, and for now, aiming toward a retest of the 200-day moving average. All right, let's take some questions here. Richard, thanks for watching as always on YouTube. I read that money is being put into IBIT, then BTC. I guess the BTC entry price and its volatility is keeping investors very cautious. Interesting point, right? I mean, I would argue that one of the, when I think of something like Bitcoin, there's the technical argument, right? What are the charts telling us? There's the sort of fundamental argument. What are the fundamentals behind how Bitcoin is created, how it's being, dispersed, etc. And then the sort of the macro thematic play, right? What's the environment for cryptocurrencies? We have an administration that is super crypto friendly and arguably trying to make as much money as possible out of the crypto markets by announcing their own Bitcoin ETFs, which came out. I think that was announced last week. The crypto strategic reserve, et cetera, et cetera. So when you look at all of those together, I mean, I think, again, from a technical perspective, the fact that the price is going up, that's what's most important. Actually, as we're doing the show here, you may notice Bitcoin has pushed above 110,000 for only the second time in history, just in the last half hour or so. The influx, I would say, in terms of other structural changes, the growth in ETFs like IBIT, like the Fidelity ETF, everyone sort of has their Bitcoin ETF, GBTC, the Grayscale, which was a trust, but then converted into an ETF structure. All of those things just make it more accessible as an asset class to a lot of different investors. There are a number of investors I know personally, I'm sure you do as well, maybe some of you, that would never open up a digital wallet, right? Never create and have a passphrase that you would need to have. Like, you're never going to do that. So that immediately, if that's the only way you can access Bitcoin, that eliminates a lot of investors, arguably most investors. But then you had products like Coinbase, where you could actually, they would, hold your Bitcoin and Ethereum, whatever, major cryptos, they would, hold them for you. So while you don't have a digital wallet, you have a Coinbase account that holds it for you. That, I think, opens the door up to a bunch of other investors, but still avoids people that are never going to want to actually own Bitcoin. But an ETF is much more accessible, right? It trades like a stock, trades like other ETFs we have. It's a familiar structure, familiar wrapper. We know how to look at the expenses involved. We hopefully know how to do our due diligence. And so I think that immediately opens up to a lot of investors, a lot of advisors that would probably not put their clients into, a digital wallet holding Bitcoin, but probably would be much more open to, to allocating to an ETF that has exposure to that market. And with the strength that we've seen so far, I think that's what probably propels things a lot higher. So I think the ability or the interest in more and more investors having access to the cryptocurrency markets is probably what provides more upside than anything. All right, Titus Ryder, thanks as always for watching. I hesitate to bring up a question like this, but I have to. I mean, it's happening. Given that we're technical analysis traders, what are your thoughts about a sudden market correction given all the mayhem in LA? Saw a number of questions on a number of different platforms. I tried desperately to not make this a political commentary, and I will try, as always, to continue that streak of hopefully making it very unclear to you as to what my political leanings are, because that's not what this particular show is about. I think there are others that probably cover those things a lot further. I would love to focus on the investment implications. The reality is, if you think about some of the geopolitical disturbance, some of the active military conflicts that we have around the world, like Russia and Ukraine, events in the Middle East and Gaza, there are already plenty of things happening that it surprises many the little impact some of those will have on the financial markets. And that's the reality of it. In general, as long as a conflict, as long as any sort of unrest is sort of localized with limited ripple effect, then just the markets it doesn't really impact companies' abilities to generate earnings quarters or years down the road. It's often a temporary thing. Having said that, right, there's a point at which something grows to the point where all of a sudden it becomes a big concern. I would say the ripple effect, in my assumption, I'm going to bring on other guests, hopefully to try to delicately answer these questions as well. By my read, I think the challenge you have right now is a lack of confidence, from non-U.S. governments and actors to the U.S. government, with the way that policy decisions are being thrown around, with just the way that things are going, the volatility we see in the administration, whether or not you agree with it. I think that instability does not tend to do well for financial markets. Financial markets like stability, they don't like instability. So we've unfortunately gone through this period in the last couple of years post-COVID of all sorts of things. Here in the Seattle area, we had part of the Seattle downtown area get taken over and declared its own sort of like country at one point. That was temporary. It was crazy and it was very heated for a short period of time, but then but things sort of resolved. So I think the challenge, is there any specific impact with the what we've seen in LA so far? I don't know. I don't think so. I think it's pretty limited. You can see the market's not really reacting to that. If things would accelerate to the point that it questions confidence in the government, in the stability of the financial system, that's where things could get pretty hairy. Arguably, the best thing to gauge that as an investor, though, is looking at the charts, is looking at price, right? If investors are getting nervous, if you do see ripple effects, if you do see it starting to weigh on the markets, you will see price action reflect that. And whether or not that's what's causing it, following price is a great way of recognizing when investors start to get nervous and when they start voting not with their voice or with their social media accounts, but with their capital. And that's what the financial markets are going to be driven by. That is my way of answering that question. We'll keep obviously monitoring that. Generally speaking, political things I avoid as much as possible. The reality is the financial markets move a lot depending on who's talking and what sort of megaphone they have at the time. So I will do my best to tie that into what we're seeing in the market behavior or misbehavior, as it were. With that in mind, we'll call it an evening. Thanks so much, as always, all of you watching the show, asking some great questions, throwing some good feedback in there. It's much appreciated. Keep the questions coming. If you're watching our replay on our YouTube channel, put questions that come up in the comments section. We'll grab those and hope to answer them in our mailbag episode later this week. For now, though, have a wonderful evening. And remember, it's always a good time to own good charts. Have a good night, folks.